Good morning, ladies and gentlemen. Welcome to today's webinar, Real-Time Daily Trading Ideas. 5 days, 5 traders. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. If you are unexperienced with our products or trading in general, please do get used to the trading environment by using a demo account. If you have any questions regarding that, just give us a call and we will be there to answer them all. This is the schedule for the week, with a small exception today. Instead of Dirk, Jens Klatt is going to be speaking to us. All right, and Many of you probably know the reasoning as to why they're trading with us, but just as a quick reminder, we do have best index and Forex offerings with spreads of just 0.6 and 0.8 pips respectively. All right, enough of me. Passing over the screen to Mr. Jens Klatt right now. Should be able to hear you now. Yeah.
Yes. Hello and good morning also from my end.
Good morning.
Yeah, thanks for having me here today. It's great to be here today in such an exciting market environment in which we find ourselves currently in. By the way, this is the face to the voice you're currently listening to. But let's switch over here to the markets and. Yeah, sure. We not only want to have a look at what just happened, or not just what just happened, but what happened already yesterday with the trade talks going on between the US and China. And I want to say, I feel with everyone out there, I have the feeling that I'm not alone with this volatility, with these comments, tweets from Donald Trump, which are somehow, yeah, only have one thing in mind: to pump up the U.S. equity markets, and then talk about trade deal is near, and the deal we are about to find is great, and everything's yeah, beautiful, and we only have to wait. And then last week on Sunday, I was really surprised, and when I saw the tweets from Trump that he said that the U.S. will impose tariffs, or not impose, but hike tariffs here from 10 to 25% from today onwards. So in fact, they are now in play within these trade negotiations taking place, and the Chinese were also caught by surprise. But still are obviously interested in getting a deal done. Why is that? Has it to be said? Because the Vice Prime Minister of China, Liu He, just went to Washington, arrived there yesterday. Yeah, and then Donald Trump started talking about a personal letter he received from Xi Jinping then. And within this, there was also mentioned a potential deal both could find. Not sure whether this is true or not. We will go through this in a few seconds. I will show you some tweets. There were journalists at the White House yesterday who just found out that, wait, not just found out, but knew that there was no phone call scheduled between those two. So no one really knew what Donald Trump was talking about. Yeah, and then overnight there was then the announcement that, or overnight here in Europe, there was the announcement that so far no progress has been made in those talks. Probably, and this is something Liu He just mentioned, that Trump and Xi Jinping will have a call then today. Probably this is exactly what Donald Trump was after the whole time, that he himself will work out a deal with Prime Minister Xi Jinping, then the Chinese Prime Minister here, and say, okay, I was the one getting the deal done. Not sure what all this is about, but all we know so far is that volatility will stay elevated. But before we'll look here, especially at the equity markets, which are affected the most by these comments, let's have a look at the FX markets. And you can already see here that I've prepared a setup which some of you are probably already familiar with. So this is not the first time that I'm here and present my thoughts on the markets around the real daily trading ideas. And so we have already talked several times about this statistically derived setup here for EURJPY, where we look at the range between 3 a.m. to 10 a.m. European time, so CET. You can see this range here with these two red horizontal lines, and after we found this range, the high and the low here, we put an EMA, an exponential moving average, into the chart. This is the blue line here, and then we say if we trade above this blue line, it's the EMA 11 in this case on an hourly chart. If we trade above, we trade breakouts on the upside. So, and as you can already see, the last closing price of the hourly candle, the last hourly candle was above this line. So then it's no surprise to see a buy stop order here being placed now. Then we set the stop here at the bottom of this range, and then we multiply our risk here, our 1R, with 1.7 to get a risk reward of 1.7. Yeah, that's in fact the setup. And I've prepared everything here already. Let me just bring this up here. We can call the setup Asia breakout if you want. So it's very similar to an open range setup. Some of you probably have checked the traders block section on the website from admiralmarkets.com. From time to time, you can already see educational articles there covering an open range setup for the DAX or also for the S&P. This setup here for EURJPY is an adaptation for the FX markets. And yeah, here are the parameters. So you can, oh, by the way, I'm sorry, this is not right. Entry short, I had to switch shortly before we started here. I had to switch the setup from entry short to entry long. So here you can see that the first candle closed below this. It was just a close below this EMA 11 here. Nevertheless, we had to enter an entry short, and I didn't switch that, but I already switched those parameters. So the entry long now can be found at 123.61. The stop is at the bottom of the range, which is 123.03. So then we have a risk resulting out of this of 58 pips. And then we multiply those 58 pips with 1.7 and get 99. And 99 pips, we add those on 123.61 and come out at 124.6. And this is in fact the setup, respectively the parameters for the setup. And all we have to do now is to wait until the breakout happens, and then yeah, see whether it works out or not. Hopefully it will. One question already. Yes, yeah, sure. I could easily do this. So so the first step is define the range. Define the range. So the question is, by the way, I'm sorry. The question is if I can share the parameters for the strategy. So I'm sure I can do this. 1 second. So it's 1 a.m. GMT. So it's 2, and in this case it's London. It's 2 a.m. To 9 a.m. London. Define the range, so high and low. Okay. Then the second step is identify the advantage. Identify advantage via EMA 11 on an hourly chart, on H1 in this case. So that said, first is we trade above trade breaks on the upside, trade only breaks on the upside, only breaks on the upside. Or second is we trade below, trade only breaks on the downside, and take profit with or at 1.7 R in this case. So 1 R is defined as the difference between the entry price and the stop here. So the difference or the width of the range. And then we multiply this with 1.7 and get our take profit level. Yeah, so that's it. That's in fact the setup on EURJPY for the day, and then sure, let's switch over to other markets, probably to the DAX, because the DAX has a very interesting structure here since the beginning of the week. So what I did here, I prepared the hourly chart, and you can already spot the sequence of falling highs and falling lows. And yesterday, in fact, I traded two strategies on the DAX. The first one was a long strategy, which didn't play out really well at the beginning of the day because we saw a sharper drop here on the downside. And with the break lower, in fact, to intraday lows in this case, I was caught in another trade. Oh, I'm sorry, did I just? No, I'm sorry. No. I haven't prepared it. So probably let's switch to the 5 or 50-minute chart here in this case. So yesterday, when we broke to new daily lows here, intraday lows, that was in the afternoon with US markets opening here below 12,050 points, we traded 100 points lower. And when the market made new intraday lows, another strategy kicked in at my end, and I was the market short then. The only problem with that was that I hoped for a stronger trend to develop, and things looked really good for this from a pure technical standpoint. If you look at this here, falling highs and falling lows, you see the market breaking lower here. This is an anticipation of here a break below 12,000 points in this case, and an anticipation of the market continuing with the sequence of falling highs and falling lows, which is in fact a very sweet spot to be short positioned in. The good thing about this was that I traded it very aggressively here, and so things went really nice, and it was only 20 points before I hit, or should have hit, my take profit level, and then the following happened. Here, I've prepared already my Twitter account, so to avoid switching over via several Twitter streams here. In fact, just to give you an idea what happened yesterday. So that was then when the market turned sharply around. Some of you probably have seen the price action in the S&P and US equity markets, which obviously spilled over to European equity markets. And Donald Trump said that he just received a letter from Xi Jinping. And then he says that within this letter, we could have seen, or there were things that said there's an alternative to a China deal here, which is excellent. And this is what Trump communicated. In fact, I think, and this became obvious then, if we scroll higher a little, you can see it here, that were from shortly before European markets opened then, it was the only reason behind this was to pump up the US equity markets, as has been, this has been the target over the last months here, when it came to all those announcements regarding trade talks are going well. It wasn't only Trump who said this, but it was also Steven Mnuchin. It was especially Mr. Kudlow, the chief economic advisor from the White House. All of them all the time repeated how well trade talks are going, and at the end of the day, as you can see right now, trade talks went nowhere. And this is the same which is true for yesterday here. You can see that was a message in the morning sent then. China talks see little to no progress, people familiar say. And then there's also another announcement here from Edward Lawrence. He's also a journalist. He said President Trump and President Xi are expected to have a phone call. The vice premier told US delegation it's up to the world leaders now, which is obviously showing they are not making any progress so far at all. And so the thing about this is, and this is where things are getting interesting. Let me just, oh, by the way, let me just here update this. This is what I think is really interesting about this. That was something which was already mentioned at the beginning of the week, and which was very obvious in my opinion. Over US trading hours, so in our case in the afternoon then, between 3:30 to 10 p.m. CET, you could already all the time over the last days hear, especially Donald Trump, trying to pump up equity markets in the US to some extent. Hey, a trade deal is about to happen and all this. And markets, after they showed some weakness initially after the market opened, shot up straight. Straight shot up, and there was no real further momentum taken on. And then overnight, we saw that this was only something mentioned by Trump, but which had no real fundament to it. And the interesting thing about this was that market participants started to wonder why. So if one idea is to pump up US equity markets, then it's probably no coincidence that shortly before US Asian markets start to trade then overnight, then in this case, especially Chinese markets, that then everything is denied to make them crash and push them lower. And now that was interesting. This is a journalist here who is very close to the Communist Party in China, if I'm not mistaken. And he tweeted something which says China's stock market closed Friday at 3 a.m. US time with the Shanghai Composite Index rising 3.1%. Today's trading spans over time when US new tariffs took effect. And this shows China's market has largely withstood the initial wave of psychological impact of Trump's tariff stick. It's US market's turn next. So what we see is some kind of yeah, is it a chess game? To some extent, probably it's a poker game, probably a little better than that. To put this. And so these developments are definitely something to keep in mind when looking at the current developments, which makes it, in my opinion, very, very difficult to draw a clear picture of where to find the current advantage. So when looking at it from a pure technical standpoint, we can see that here we are currently caught in the DAX in this case in a sequence of falling highs and falling lows, and we should probably favor short engagements over long ones. On the other hand, we have to say we have not here continued with this sequence yesterday, but shortly before we broke below 11,950 points, we turned sharply higher. Respectively, that was happening here in the morning. So we nearly pushed higher then from these lows, but we didn't break them. And this is a first sign that probably the sequence is about to end. And this is especially true if we are making it above 12,180, but probably let's use this here, 12,220 points, because this would then break the sequence of falling highs and falling lows. And depending on how market participants interpret a potential deal being found between the US and China, could probably also drive us higher, then significantly higher in the days to come, in the upcoming week of trading. All I want to say here is be really careful. So the current market environment, I mean, sometimes you're getting caught on the right side of variance, sometimes you're getting caught on the wrong side of variance. So yesterday I was, for example, caught on the wrong side of variance. Nevertheless, it didn't kick me out of the trading game because I knew the risk in my trading before I entered the trade. And so at the end of the day, it was a bad feeling caused by a political announcement with probably not having any substance, any fundament to it at all. Nevertheless, at the end of the day, it's just one trade within a range of hundreds of trades over a time span of a year, for example. But what this perfectly illustrates is how important it is, because you just do not know in which direction those developments around the negotiations between the Chinese and US will turn, that you are aware of risk management, and that you have clear predefined risk management rules. Set your stops and then just hope to be caught on the wrong side, not on the wrong side, on the right side of variance, but not on the wrong side. At the end of the day, nevertheless, it all comes down to being a little lucky then to your position. But what you shouldn't, what you definitely should be aware of is your overall risk you're taking when entering a position. So if you ask me now in which direction I would bet the market going with a higher likelihood, I'd somehow say I expect markets to go up instead of go down, even though this is nothing I would hold over the weekend. So probably we have a tendency, especially with a chance from the US then trying to, especially Donald Trump, pumping up US equity markets again, and the DAX following suit then into the end of the week. But nevertheless, over the weekend, things could completely turn, and on Monday, in this case, we could probably see a similar, probably, or if not even a sharper drop here, and significant below 12,000 points. So today, probably advantage should be seen on the long side, yes. Nevertheless, be really, really, really careful when holding long positions over the weekend, especially long positions, but probably also short positions and general positions over the weekend in the current market environment. We can't really see in which direction these negotiations are going here, and this is definitely something to remember. And yeah, trade talks are everywhere. Nevertheless, probably it makes some sense to also have a look here at the currency markets and the economic calendar. I've prepared the economic calendar on the website from Admiral Markets. You can find it at admiralmarkets.com, and then you go to analytics and there to the Forex calendar. And I've prepared it for today. You can see it here. And some data was already published, in fact, but the most interesting data will be, surely, I'm very sure that this is the case for today, the inflation data here at 1:30 p.m. London in this case. So inflation data coming out, and I have to say it's surprising to see that the current expectation can be found at 2.1% here after last month's data for inflation rate came in at 1.9, and especially after several comments after last week's non-farm payrolls, for example, they came in, I think we can say, very solid. Nevertheless, the US dollar couldn't really take on bullish momentum. And that came as a surprise. Initially, it came as a surprise. At second glance, it became obvious what was the driver for the US dollar. In this case, the driver lower. There were comments from finance. The US Secretary Mnuchin, and also the the Secretary Treasurer from the US Treasury Secretary. Finance Minister, well, I don't know, Mnuchin definitely, and then also the Chief Economic Advisor Kudlow, who both said that they see no other choice for the Fed than to cut rates. Economic is doing well. That's something they emphasize. Nevertheless, inflation is not picking up. And when looking at this, I think it comes as a surprise to see that the expectation currently is at 2.1%. Surely you could argue that this has something to do with rising oil prices over the last 3 months in this case, but nevertheless, I'm somehow a little skeptical if this data set could really come out that high in this case. So why do I mention this? Well, we know that there's a positive correlation between US yields and a dollar JPY, which means if inflation data comes in lower than expected, you usually expect another push lower in US yields here, 10-year Treasury yields, which is then a potential bearish driver. And here making a break below 109.70, very likely. And on top of that, it's not only 109.70 where the break is likely, but there's another potential driver, uncertainty and potential risk off, which is also something to remember when these trade talks are going on, and there is a high chance of disappointment and no deal being struck between those two, that this could also result in market participants unwinding their carry trades, meaning capital flowing back into the Japanese yen, which could also act as another bearish catalyst in dollar JPY below 109.70, and would then activate on the downside a level around 108.40 here in this case as a first potential target. So this is also something worth remembering. Today, 1:30 p.m. Inflation data, so 1:30 p.m. London, and then inflation data here from the US. And then I see also another question. It's on EURUSD here in this case. 1 second. We have it here. It's a EURUSD. What's my outlook on EURUSD? It's for me, it's very, very difficult. So let me put it that way. I had a position on that was in fact over the whole month of April. I had a EURUSD short position. Took some time till it finally broke below 111.80, 112 here, and I thought that I was definitely on the right side, and I was very, very comfortable with this trade. You can also read this, by the way, in several of the technical articles being published in the Admiral Markets a traders blog, for example. I was very, very positive for the short side in EURUSD, and then there was two things happening which caught me by surprise. First, there was GDP data that was 2 weeks ago. GDP data from the US came in significantly better than expected, and the US dollar did not break below 111 here. And then the 1 week after, that was last Friday, non-farm payrolls came in better than expected, and there was another attempt to down-talk the US dollar from the Trump administration. And that resulted in the fact I held the position over the weekend. It was a midterm trade, in fact, so I targeted for 109, 109.50 on the downside minimum. And so my stop was here placed at 113.30, which wasn't hit or wasn't attacked at all. And then I was thinking about the weekend, okay, what to expect. And what did I do? Well, I thought, or no, I held the position, sure. And then I saw the news on the potential escalation of trade war last week. And I thought, okay, this is good, because usually you expect such tariffs to be positive, in this case for the US dollar, because countries which are affected by such tariffs usually react in a way to somehow devalue their currency to counter any negative impact such tariffs could have on their exports or on their trade relationships with this country. And then, in fact, the US dollar took on some momentum, nevertheless wasn't capable of really attacking 111, and that resulted in the fact that I took out the trade discretionary and said, okay, it's not developing the way it should develop. And so that said, I'm obviously very, very skeptical in or for further potential on the downside in EURUSD. On the other hand, I have to say I'm not really confident that the euro can significantly push back into the range and make it back above 113 in this case first, because there's too many skepticism around the economic developments in the Eurozone in general. And that's one of the reasons why I don't want to be euro long in such a spot here, even though I'm also not short euro USD, but I think we have a good chance to now be neutral and then have to wait for further impulses on the up or on the downside. And it's probably better to have to stay flat, at least currently, in euro USD. Yeah, and that's it from my end.
Great. Thank you very much. Thank you very much, Jens Klatt. Thanks for the comprehensive analysis. And thanks for you guys for listening. I hope you enjoyed today's webinar. You can review it any time on YouTube. Just give us a couple of hours or minutes to upload it there. Thank you very much, guys. Have a good day ahead and a good weekend. Thank you very much. Bye-bye.